back to the sell-off now, and the numbers are startling. Yesterday was the Dow's worst day in 2 years. Both the Dow and S&P are in negative territory for 2020. The point damage to the S&P was the second worst on record. The aggregate market loss was $927 billion in one day. Joining us right now to talk about it is Ellen Hazen. She is the Senior VP and Portfolio Manager at FL Putnam Investment Management. And our guest host all morning is Sarat Sethi. Good morning to you. Okay, so here's the question. And Becky tried to ask it actually yesterday of Warren. And Warren is always such a long-term thinker that he doesn't always talk about the day-to-day issues. If you're an investor and you have cash sitting on the sideline, are you supposed to wait for the next? Are you supposed to wait 2 or 3 days from now? Are you supposed to wait a week? Are you supposed to go in right now because this is the lows are in? How do you even begin to think about this? I
would quantify it and say, off the peak, we're 5.25%. So every 18 months, you get a 10% correction. 14 months ago, we were down 20. We had a 6% last year. To answer your question, if I was a long-term investor,
yes,
my objectives were...
You're a Warren Buffett-style investor. You don't even care. You just invest today.
I would take a piece of my cash on the side and put it to work today. I put some of it yesterday to some clients who had cash. I think you just lower you start putting money to work as the opportunity comes. Look, you're going to get pre-announcements almost every day. You had, MasterCard yesterday. You're going to get more today. It's just going to happen. The travel industry, industrials, they're all going to come out and say, look, uncertainty. We don't know how this is going to work. So buy high-quality companies, put some cash to work. I'm not saying going 100%. That's one thing you got to be careful because it's 5%, could easily go to 10 to 15.
But all of these warnings, the hard part to figure out is these warnings, they don't even know what the warning really is half the time.
Yeah, but look back at a cycle for 15 years to 20 years on the S&P.
Right.
And kind of you say, I go through all these, whether it's Ebola, SARS, MERS, take, the big financial recession. If you're looking out 10 years, you have to start dipping in when the market gives you opportunity. You just do. It could go down another 15%, but you got to have that longer term view. Not I need this money in 6 months or a year.
We were looking at GDP and corporate earnings, particularly GDP slowing this year. Right. That was going to happen whether or not the coronavirus occurred.
Yes.
And you had the S&P up 3.5% in January until the last week where it lost it all. You had it up again 3.5% back to the old highs in February up until a few days ago. And you're looking at 5 to 8% return for the full year. So if you already had 3.5% in January, you should expect a breather. And it could have been the coronavirus. It could have been something else.
5 to 8% return for the year. That was your expectation to begin with.
Yes.
5 to 8 maximum. So you were not.
We had a 31.5% return last year, and we're seeing a slowing economy this year. And 5 to 8% would be a normal return long term.
And look, last year, we've talked about this at length, is the reason the market went up is you had multiple expansions. So earnings were supposed to come back up this year.
Right.
I think a lot of that's off the table. So you're looking now at 2021 for some earnings growth. So the market's not going to look out that far. So the opportunity to buy is now, so that you hope in a couple of quarters when things kind of flatline and start growing. That's
as you guys have been looking at the market in the past 24 hours, is there particularly anything interesting in terms of dislocation, meaning businesses that shouldn't be hit that are being hit?
Well, you look at healthcare stocks, right? Maybe there's the political overhang coming.
Yeah, that was Bernie.
Okay, so that could be something that some of the stocks like Zimmer, right, makes hips. Why is that thing getting sold off? Or J&J, or some of the others. So there's a slight dislocation there. If you want to be a true value person, you start looking.
Do you think anyone's ever going to get a new hip if we have Medicare for all? I don't.
No, but when you look at the companies like that have global sales as well, that's where you want to do on the healthcare side. I'm not talking about the pure insurance companies.
But that definitely, yesterday, United Healthcare, that made no sense unless.
Yeah, that was a.
Well, but that's the issue is where
unless you can tie that to Bernie's 60 Minutes appearance.
Yeah, I think that
you see a Sanders. I'm talking politics. Just bear with me. A Sanders Warren ticket is eight points above Trump Pence right now. So who knows? But that's why United Healthcare.
We're down 7% yesterday for that reason.
Okay. And it's a Dow component.
Okay, would you touch something that's right in the middle of this? Would you touch an airline?
Yeah. We own Delta. Delta's at 53. It's off, almost 20% of.
But that's why maybe that's where the opportunity is. Go buy Expedia now.
Yeah, I like Delta a lot. Delta's investment grade, 3%, probably even 3.5% dividend yield. I'd start nibbling on it if you didn't have an exposure. I'm not saying go buy your full position, but those are some of the dislocations. Royal Dutch is a 7.5% dividend yield, right? Secure dividend. So I'd look for companies like that where I think you can get that dislocation opportunity.
Ellen, final
I
word
think
to
the
you.
thing that makes sense to do is to have a shopping list based on whatever your criteria are. Don't try to go around jumping after whatever was down the most yesterday because it was down a lot. Do your homework ahead of time. Find the companies that have secular growth, that have high return on invested capital, and when they hit your targets, go ahead and buy them. So if you look at Home Depot and Lowe's, as we were talking about earlier, strong numbers, strong housing, very strong return on invested capital. Begin to nibble. Absolutely start to buy some yesterday. Same thing with Visa, which is down on the
Even when Home
MasterCard
Depot's
news.
up this morning?
Yeah, if you're seeing stocks that are at reasonable valuations, start with the quality that you're looking for with a long-term outlook rather than try to pounce opportunistically on whatever shiny object is catching your glance at the moment.